we're in Unit 3, Chapter 9 and Lesson 1 about banking. So we're starting a new unit on personal finances, and today we'll talk about some banking options you'll have and how the banks charge and make their money. So banks and other institutions offer many different investment alternatives, ways for you to access, save, and grow your money. Things to consider when you're looking for an investment product. What type of features it has. So what is the purpose? What purpose will the product serve? The cost, what fees are associated with the product? Risk, how risky, how secure is your money there? And growth, how quickly does it have the potential of growing? You want to make sure that you're always getting the right account when you're first opening up accounts at a bank. And as a young person, there's a lot to consider there of how you might use it. Will help you decide. So to get your finances organized, you need to set up an efficient system of bank accounts. Notice that there's an S on here. You often have more than one account. Use this list to see if you have the right types of accounts and if you could reduce your banking fees. And next lesson actually will be looking at other products for saving and investing. So right now we're really just focusing on two types of accounts: the checking account and savings account. Okay, so your checking account should be your day-to-day account that you use for day-to-day transactions. A transaction's anytime that you have a funds moving in or exiting your account. That is a transaction. So have your usually for a checking account, we have our paychecks deposited there, or if you still receive a check as a physical check, you'll be depositing it most often into your checking account because you want this to be readily accessible for money to use in your life. Often people set up a pre-authorized transfer service from their employee to the bank, so their pay goes right into it. Sometimes people set up an automatic transfer for things like investments, or their RSP. RSP means retirement saving plan. So for example, if you get $2,000 every 2 weeks, maybe 400 of that goes towards your retirement plan. If you're very disciplined and you stick to that, and you'll be rewarded later on in life when you retire. Other people set up pre-authorized bills and loans so that to ensure that you never miss a payment just because you forgot or you didn't realize the date. So often people schedule these around their paycheck days so that, for example, if you're paying rent or you're paying a mortgage as an adult, maybe the mortgage comes out the very same day that your pay goes in. So in ways, you never have that money. You never think you just have that money to use, and you don't want to spend it by mistake. Signing up for paperless record keeping. So maybe you get an email of their statement, or you can go online and look at your statement and your balances. That could be one other way to save some money and not getting billed for $4 a month based on just sending you mail. Well, what are your options? Because you'll probably be using this account a lot, make sure you choose a plan that allows you to make all the transactions you need without paying additional fees. So the bank will charge you some fees based on how many times of withdrawals and deposits you make. So in other words, if you make a lot of withdrawals, bill payments, or other transactions, choose an account that offers unlimited transactions, although this will come with a cost. Okay, so I'm just going to write something in there. Where's my pen? So this does come with heightened cost. Okay, higher cost if you're going to go with unlimited. If you usually make, sorry, if you usually make very few transactions, or if this is a secondary account, you might have a date-to-date account, you might have a different account where you just sort of transfer money in and out of, you would choose a lower monthly fee because maybe you can lower your fees. Okay. If you expect to have a steady balance in your account, uh, choose a plan that waives the fee when you keep a minimum balance. So sometimes these places will say, for example, if you keep $1,000 balance, it will waive your fee, waive the $10 fee, for example. Now that's just an example. It varies for every bank. So that's checking. Checking is most grown-ups. Whenever you start making money and paying some bills, you're going to need a checking account. Now, a lot of people will still carry a savings account alongside that. A savings account is a great way a great place to put um, save money for a rainy day because you have ready access to your money when you need it. It's helpful to have an account that's different from your day-to-day checking account because you're less likely to spend that money you put aside into a separate account. So it could be something that you contribute to from time to time. I think one of its best purposes is this: if you know you're going to need to buy something large in the next few months, it's good to put money aside in that savings account so that it's not in your regular day-to-day money spending, but it's not so far off in the distance where you could be investing that money. For example, if you're going to buy a new, I don't know, a new phone, iPhone. You know you're gonna buy, um, well, maybe even a car, but and you know you're gonna do it in within a 6 month time frame. Then maybe you just park your money and you keep it built. You keep that money saved in the saving account because you know within 6 months or so, or maybe even a year, you're gonna be spending that chunk of money. If it's going to be longer than that, you might want to think of other ways to save the money so that it actually grows a little bit. A savings account is not really going to grow your money. So a savings account is just sort of like parking your money somewhere where you won't be touching it in your day-to-day account, and it's there when you're planning to use it. So your options are: you want to be figuring out how long, sorry, figure out how you will use your savings account can help you to determine which type you need. Usually, the savings account options are differentiated by the minimum balance and how much you expect to accumulate. Savings accounts usually include fewer transactions and higher transaction fees than checking accounts, so try not to use your day-to-day banking out of your savings account. It is worth saying that like you'll get charged more higher fees if you're taking money out of your savings account, and that is to discourage people from doing exactly what their goal was to save that money. So they try to disincentivize you to take anything out. What's interesting as a young student, your age, is you can probably get an account that does both. Um, the checking account probably doesn't have fees for students, or the savings account probably has no limit on how many transactions you actually do. So this is a very complex table, but it shows you basically the breakdown of different checkings accounts. Now, these examples are from TD Canada Trust, and they're probably a few years old, so uh, they can, they're not too far off because I've looked at some of these fees lately. They're pretty good. Review and compare checking accounts offered by TD, and then answer the questions below. Now, I am not promoting one bank or another, but often your big Canada banks like Bank of Montreal and TD, Royal Bank, they're all going to have similar products. Now, if you are um, not worried about going like with an online account, online bank like a Tangerine or Simply Financial, some of these other ones, Alterna banks, sometimes you can really save some money on these. But what you're missing there is there wouldn't be a physical bank to go to. So some people have a hard time getting their head around that. Anyways, a lot of the traditional banks also have online banking options that are really easy to follow through with these days. So TD in 2011 had these most popular accounts: the Value Account, Value Plus, Infinity, and Select Service. So very much geared towards different types of customers. So in each of these, they had a monthly fee. Okay, so all the way up to $30 and as low as almost $4. So the monthly fee, if you could keep your balance at 1,500, you could waive this fee. All the way to the top customer, if they kept a balance of 5,000, they could waive this fee. So most of us can't keep a balance of 5,000 that easily, and so this may not be a good option for us. Um, what Here's where it comes down to where you're going to have to know is and how to practice your questions for these types of problems would be how many transactions are included in the $3. So you get 10 for every 3.95 in fees, and this you get 25 for every $10.95. So when we start calculating how much this person will owe in extra fees, you already keep in account of the 10 that they have already paid for. Now look at these last two ones, Infinity and Select Service. They have the fees are high enough that there's no limits on the transactions per month. Yeah, and this is per month. Then they add these other things like additional transactions. So if you were to go over the 10, you'd get dinged $2 or $1 every time you do over. So if you had 15 transactions in this account, then you'd pay $3.95 plus $5 more. Okay, you get billed for automatic banking withdrawal fees. Now, to be honest, these are more like $3 nowadays. They've gone up a little bit, especially if you're using a different bank than yours. So if you're at a Royal bank machine, but you're taking money out of your TD account, I think this number often jumps up to $3. Okay, they have this plus system fee if you're taking out money in US or Mexico. There's a plus 50 system fee if you are outside of Canada. You have additional money. Okay, here's now. So these things are common. So I'll check off some things that are common. Email. We all like the convenience of email transfers. Maybe you owe your parents some money, so you're going to email them. Maybe you owe your friends some money for lunch, and the best way might just be to forward it over as in an email transfer. Okay, so that's that transfer. Here is an in-bank bill payment or in-branch bill payment. Not necessarily exactly what this all means, what defines this, but basically just spending money as paying bills out of your account. View check service. So sometimes people lose track of their what a check was meant for because all you see is the number, like, oh, it's a $200 check in your balance, but I don't know what I wrote it for. And then you can always ask them to see an old check. Anyway, those things are all they don't change. They're for any account. Those are sort of extra things that anyone has to do. All right, monthly record keeping. Well, you can choose paperless or choosing to receive papers. You can get a monthly statement. If you want to add passbook, which was a really cute thing when we were all when I was a kid, and we have your own bank book and you'd keep your balance. That seems to go not be too. That's not common anymore. People just pull it up on their phones or they look it up online. All right. So anyways, what about interest rates? So this is a checking account. Our intention with the checking account is not to save money and hopefully not spend a lot of money to the bank. So there, it makes sense that there's no interest rates. So if money sits in there, even this $5,000 right here, right? If it sits in that account, it's not earning any interest. So that's sort of one disadvantage of this 5,000. So you have to understand. Well, $30 is more interest than you would ever get. So you are saving money in a way you're making interest on it. Are there risks? All accounts are insured by the Canadian Deposit Insurance Depot. So, in other words, banks are insured by this corporation to make sure that your money is safe. Okay, so we get some questions to think about. All right, what is the type? Well, I would say that it's good for daily transactions. A daily transactional account for deposits and withdrawals. Pretty straightforward. Okay. Why do you suppose the monthly fees are different for each account? Well, it suits different customers. Different needs. Okay, so obviously, one account, the value account, is probably for younger people, probably people just starting out. To be honest, I use that one if I add a, one of my children's accounts to my banking information. I'll probably give them a value account. Um, Whereas myself, now with a lot of online banking, I don't do a lot of banking in transactions, so I might even be able to get away with the Value Plus account and I'm paying bills and all that stuff, but I think often I'm fitting under 25 transactions a month. So now, if I was running my own business, I had a lot of things for that. I might have a select account where if I'm running my business out of that account, then I'm doing a lot of things with that account. So it might be worth it to spend that. Then again, they likely have business accounts for actual um, more for making it more proper. Okay, um, what interest rate is offered on these accounts? Well, we mentioned it, 0%. You're not making any savings. There's no savings. So again, the checking account is not has no goal to save you money. All right, here we have some examples of different scenarios that we figure out how to determine our monthly fee. So we want to get the total at the bottom. Okay, so here we have our value plus a customer, and we're going to look at our example and really look closely at the information they're telling us. Okay, which which checking account would be best suited for your spending habits if, on average, you typically make the following monthly transactions? Assume you maintain a minimum balance of 800. So, right off the bat, the minimum balance of 800, does it reach this right here? Okay, so it doesn't waive any fees. So it's not good enough to waive any of the fees. So that's one clue. So will not, will not this will not, there, this will not waive any fees. All right, here's where it's really important. So this person usually does 5 cash withdrawals at TD Bank machines. They do one Interact ABM cash withdrawal at a non-TD. So remember, there's a different fee for those. And they usually do 15 debit card purchases at stores and restaurants. So let's start with $3.95. All right. And this one's $10.95. And this one is $14.95 if we look at our chart above, and $29.95. Okay, what we have to do is add up all these transactions. So 5 TD cash withdrawals, 15 debit purchases, and then 1 Interact. So let's see what those cost. So cash withdrawals and purchases. Okay, so cash withdrawals are $1. Sorry, $1. And the Interact one, so meaning if you go to a different bank. So this is at a different bank. All right. So we have $1 and $1.50, and so the rate is different for these. See, this person's allowed 10 transactions, right? So if we have 5 plus 15 gives us 20 transactions. 10 are covered, so minus 10 means 10 are being billed. And our dollars, so we're going to multiply that by $1 for the fee. So that's a $10 right there of additional charges. Now there's also the matter of this Interact ABM withdrawal. And if we look up here, that's from a different bank. So that's a Interact ABM withdrawal fee of $1.50. Okay, so this is $1.50. So how are we going to do this now? We're going to get the total. The total will be, okay, maybe we'll sort of write it at the bottom here. We have $3.95 plus $10 plus $1.50. And this all equals $15.45. All right, next. Okay, let's look at the value plus option and see if there's an advantage to this one. This one allows you to have 25 transactions. And of course, we only made 20 transactions. So we have 0 charges. Okay. No charges on this, but we do have still the outstanding cash withdrawal from another bank. So when we add these two up, it's $10.95 plus $1.50, which brings me to a total of $12.45. So when we looked at this and said originally, we thought, wow, that's a big difference between $3.95 and $10.95. Is it really worth it? So we add 25 more transactions there, and it gives us plenty of space to make the usual 20 that we make every month. We're not getting billed anymore for it. So this is where we save the money. And then, that doesn't change if we do some Interact banking. All right, and we add that, and we have $12.45. So this is more affordable. So again, if you think you're someone that is going to continually go over 10, then you really do want to make the jump up to the value plus. Now these ones we'll go through a little faster. $14.95 includes infinite numbers. Okay, there's my infinity sign. All right. So obviously 20 obviously 20 transactions is less than infinity. So no charges. Okay, we can say the same thing here, no charges. Sorry. Right? Because this one's infinity also, right? Unlimited. So we have right, $0 to add here, $0 to add here. We have $1.50. They don't get out of that. The higher customers still have to pay that. And so the totals of these is $14.95 plus 150 equals $16.45. So even this is not a bad example of at $14.95 to spend that difference, to have that rest assurance that even if you go over 25, you're not going to be spending that much more. But then again, if you're like me, I'd like to keep my fees down as much as possible. So I try not to spend too much in anticipation of doing something that I'm not going to do. So when we think of how many business days you actually have in a year, in a month, um, and you think, oh, if I average about one transaction a day, well, it's 4 weeks in a day, and every week has 5 days. So we're looking at 20 days. So if it's one transaction a day, I don't know if I need an unlimited amount. So depends though. If you're using your debit card for buying lunch, buying coffee, all that stuff, like 2 or 3 times a day, then maybe it's worth going up to the infinity, because eventually it's going to eat away at your account. All right, this one, well, oh, actually, it waives. We were wrong, or I was wrong. It waives even the ABM charges, so it's just one all included amount. But that's a high amount. Like you need to be a big earner to be willing to spend this much on a checking account. Okay, good. Let's discuss savings accounts. Well, we talked about the savings accounts, and here these have a similar chart, but it's kind of different in some of the things that's highlighting. So here are the savings accounts offered at TD. I think these have stayed the same, even though this is 2011 and we're in 10 years later. They still have an everyday savings account, high interest, and a TD Youth. Okay, so again, a lot of you would be presently in this category, and you're able to use this account for a few more years. So take advantage of it, because there's good reason to use that. All right. Now here is where it differs. In a savings account, we're hoping to have daily interest. So in each of these, there's daily interest. Is there an interest rate cap? No. So well, if the interest rate was happened to go way up, in, like, if Canada raised its interest rates, then these interest rates could raise. This one is a special deal here, and yes, it caps it because you enter this with an agreement. With a high interest savings account, you enter your money in with the agreement of the amount you're putting in and the term you're going to keep it on and the rate it's going to be there for. And so it doesn't fluctuate. Do you get, are you allowed transactions? Well, in your everyday one, yes, you're allowed one for the whole month. In the high interest savings account, the whole point is to keep that money in there. So they are basically deterring you from taking that out. And with a youth account, you're just learning. So the bank knows that, and they're saying there's no limit. You're basically going to treat like a student or a child would, or a teenager with limited spending, independent spending. They would use a TD Youth account, um, basically as a checking or a savings account. So there's no real difference. So there's no limit. So they're not going to punish you for taking too many withdrawals. So you might use your debit account and take out coffee, and or not. I mean, as an adult coffee. Maybe I don't know if you guys drink coffee, but just lunch and McDonald's and all these little things you buy on a day-to-day corner store. Okay. All right. Well, what happens? Well, when you do take debits, any additional debits past the one, you'll pay $2 for it. Now that's higher than the $1 you paid in your checking account. So again, it's a deterrent for you to spend money in your savings. Here, they really don't want you to take money out of this account. The whole purpose was you're lending it to the bank. They're giving you an interest rate so you can earn some money. But the bank also wants it to be reliable that they're using that money. Okay, and then you're not charged fees. So use your youth account as long as you can. Additional fees. I don't need to scroll this up. I like how. Okay. So additional fees. You would get charged for ABM withdrawals, same amount as the checking. You charge for using the account in U.S. or Mexico. So those were the same fees. Interact money transfer. Let's just double check. Wasn't that? I think that was the same. It was $1.50. I'll look on my paper so I don't flip. Yeah, email was one, so that's not going to change. So you could save up a lot of money in your savings account, and when you finally need to send them money where you need it to go, you could do an email transfer, and it would be a good way of doing that. If you want to view an old check, same fees. The minimum balance to waive your debit transactions would be not applicable in these two accounts. But if you carried a big, large account, they would waive these fees, so you could take money out whenever you need to. Okay, record keeping options, again, not a big deal. Most people are going paperless, online. If you really wanted a monthly statement, you'd be charged for it. If you really want to carry a passbook, they would charge you for it. Now here's the real important part that we want to look at for interest rates in the savings account. Interest is calculated daily, so that's important because we would want to use that in any calculations we're going to use soon. All right, so from 0 to just before $5,000, you're getting 0.25% and 0% on your high savings and 1.5. So again, this looks like the best. So if you can stay in your youth account, that's best. If you're carrying over 5,000, you will get 0.5%. And here is what's supposed to be an advantage here with the high is you're going to get 1.2%. So and then with the TD bank account or the youth account, 1.15. So again, your decision whether one of these is better, but to be quite honest, these rates are fairly low when you think that you're going to be saving money. So saving is different than investing. We said that in the first slide. Saving is putting your money somewhere safe before you decide to spend it on something. So it's a temporary thing, and you're not doing it to grow your money. If anything, it might keep up a little bit with, there's the cost, that the rise in cost of living. Everything kind of rises over time. So you're not going to be retiring on a savings account. You're going to have more money than that, or you're going to have to look for ways to invest, perhaps. Okay, risk. All of them are insured and up to this amount of money. Now, we don't think about this, but if you ever get this much money, if you're ever lucky enough to have this much money in a savings account, you should be looking to invest this with a professional person who knows how to invest in mutual funds or how to build your retirement savings. Okay, not just leave it at a bank in a savings account. So, what is the purpose of a savings account? So again, let's go and avoid my handwriting, and we'll type this in. So I have place, let's say an account to deposit funds to earn low interest and to withdraw later time. Okay. Um, this is not meant for daily transactions. So as soon as even teenagers start to get a part-time job and start earning some money, and then you might even have some of your own bills to pay, like for your cell phone data and stuff like that. You might want to start opening up two accounts and having a checking account where your money goes into, and you spend money on bills, and then you might have to have your own savings accounts where you have goals in mind to put that money aside, or your savings for something big that you want. So the other thing I was going to say, this is kind of like temporarily park your money with goal in mind. I mean, I don't know. Let's say a new iPhone, used card down payment. Right? Lots of different. There's no shortage of things you want to spend. Let's say a gaming system. Right? It doesn't have to be a huge amount of money. It's just like, a new gaming system costs $500. Well, I'd rather have that $500 not sitting with my daily spending uh, in my checking account. So that's the idea there. So why not have your that $500 sort of parked aside? No, that's not going to work. Okay, that works. Okay. Well, is there a monthly fee associated with the savings account? Not usually. Why do you suppose the debit transfer fees is so high? Well, the whole point is to discourage people from withdrawal drawing um, savings that meant for something else or some goal. Okay, and yeah, withdrawals are discouraged. Okay, so here, how's this going to change if we do some math on figuring out? Here's the situation. So what would be the best service charge? Be the service charge for each of the following accounts above. In 1 month, you had the following. So 2 cash withdrawals, okay, 2 cash withdrawals, 3 debit, and 1 interact. Okay, so first of all, in this day savings, you're allowed one allowed. Here, no allowed. Here is unlimited. Okay, now this person is going to need 5 total transactions. Okay, so if they get one for free, so 5 minus the 1 is 4, and 4 times $2, if you look at our chart, it's $2 for transactions. So that's going to be $8 charged. Now, there's not usually a charge, like a monthly fee for just having the account. So it really depends on these things. Now, the interact we said was the same. So we have 150. Okay. So in total, we have $8 plus 150. So a total of 950. So if your whole goal is to save money, um, taking away 950 every month is not going to be a good strategy. Okay, so here we have again, 5 transactions times $5 each because they don't want you taking money out of this account. The high savings, the reason why they're giving you this is because the bank makes money. The bank makes money by lending your money to other people in the form of mortgages, in the form of car loans, and other loans. So if you're holding your money at the bank, it doesn't sit in a safe somewhere. It's just electronic. It just gets in there, and then they can loan it to other people, and then those people pay even higher interest. So actually, the money they think you're getting interest, they're going to be getting paid more interest than you're making. So that's how a bank makes money now. That's their business model. So you can't blame them for it. People have used banks since the beginning of modern civilization. So they have it. They have what we need, and we have to pay for it. So all right. Now this is so. It's really they really discourage you from taking money out of that because $5 every time you want to take that money. So if you ever had to take out money, I guess maybe if you took out all in one shot rather than several times, then you get less fees. So, anyways, this is going to be 2650. That's a lot of money. Let's say you're saving up, $1,000, and you take out almost $30 of that just because you're withdrawing that money irresponsibly. Okay, here, well, there's no limit, so $5 times zero is zero. But we do get that one time we pay for the bank machine withdrawal. So as long as if you can keep using the value account, the TD youth account, as long as you're up, I don't know what the age is, 18, 20, maybe as long as you're a student, I'm not sure. Because I know they have a student checking account. So when you go off to post-secondary, you'd want to have a student account, which usually lowers your fees, gives you a few more transactions, and then you could probably keep a youth savings account open and enjoy the benefits of that. Now, finally, we get into a couple questions that are a little harder. Probably give ourselves a little more space so we're not cramped for a room. But here we go. How would we tackle something that was about interest, the interest earned? Okay, so we said that the interest earned back in this place up here is calculated daily and paid monthly. Okay, good. That's important to know. So compare the interest earned with each account in a $4,000 balance. Now it just wants us to focus on the two realistic ones, the everyday savings and the youth account. Okay, let's begin. So it's going to want to know the interest earned. We're going to need to find out, well, we're given our principal of 4,000, and we're going to need to know our A, our future amount. Okay, so we also know that uh, we have an interest rate of 0.0025. How do I get that? Let's recap. The interest rate on the savings was 25%, so 0.25%. So that converts to that, okay? All right, and then that is done daily. So 365 days. And the number of occurrences will be 1 every month. So every 1 month for 12 months times 365. All right, so if we go with our numbers now, let's just change our. So first I need to find out A. And if remember, A is P times 1 plus I divided by N. Now, from our last unit, we learned how to do this. Okay, and we'll say 1 plus, and this is where we put this number in. Okay, 0.0025 over 365, and our N is exactly what we put here. So 365 times that. Okay. Now, I actually did bring, okay, let's try inputting this into a calculator now. 4,000, got a big bracket. You're going to have to keep track of your brackets here. Okay, so you're going to say 1 plus, okay, 0.0025 divided by 365. That means we're taking the 0.25 interest rate, dividing it daily. Oh, and that's 365, not 56. Okay, we are going to close that bracket. And then we're going to put in, raise that to 365 over 12. We get an answer of 4,083 cents. Now, that sounds really small, and it is. So in 1 month of $4,000 will make 83 cents. That's basically what we're saying. Okay, so, oh, I guess that disappeared. So we had 4,083 cents. How do we determine how much interest was earned? Well, we take the interest equals the A minus the P. So 4,083 minus 4,000. This is pretty straightforward. Most of you will do this in your head, but 0.83 cents. Wow. So again, I was trying to tell you again that a savings account is not a place to earn money. It's not a place to invest. You're not going to get a big difference here. So if you're investing $4,000, there's other ways to perhaps do that. If you just want your $4,000 to sit in a bank before you plan on using it for a car down payment or something, that's a great thing to do because then you're not risking it at all in some sort of stock market or mutual funds, which you would want to think about if you were going to keep that for a longer period of time. All right, let's look at the youth account then. The youth account, again, we have our A is unknown, our P is 4,000, our I is a little different. We're getting a little bit more money. We're getting, let's just look at that. We're going to have a rate of 1.15% equals 0.01. There's the 1%, 0.5. So that's going to be also daily. And our number is going to be the same as over here. We're still talking about doing this, applying it every month, and 365 times. Okay, so we are going to, let's write that in. So A equals 4,000. We're using the same equation over here. Let's write the equation out. So P 1 plus I divided by to exponent n. A equals 4,000. Okay, 1 plus, and our I is 0.0115 divided by 365, all to the exponent 365, 12. Again, I think maybe I should talk about that again. Think about this. The interest is applied daily, but it's only out of 1 month. So what they're really saying is we're applying it daily, 365 days a year, but we're only focusing on 1 month, so 1 out of 12. So I just want to make sure that's really clear, that we're only doing that how many times? Okay, is the like that would end up being what, 33? The average tends to be 30.4 months a year. Sorry, days in a month. So if you average out all the days of the year divided by 12, you get 30.4. So, all right, let's get our calculator. Now, do yourself a favor. What I like about Desmos is I don't have to delete everything. I can just go in and replace what I want. So starting here, I want 115. It's 365 still. 365 still up here, and there we go. We got an answer here of it's going to be. Let's just remember this because it will go away. So 4003.84 we'll round up to. So 4,084. Oh, three. $4,003.84. So you students are getting a better interest rate. The 1.15, yeah, you earned $3 that month on your $4,000. Again, it's better than over here. It is not what it's not your necessarily what you'd want as a long-term investment. But again, if you're sitting money there and you want to spend it on something soon, it might as well earn some money there for you. Okay. Now, what would be our I? Our I is much simpler. We're just going to take $4,000 off of that. Okay, so that was checking and savings accounts, and hopefully, I mean, there's so many other different examples, but these are kind of the more common ones. But like I said, be wise when you're going out and choosing your bank accounts, especially when you're moving from student life to adult life. Keep this in mind, okay? Thanks for joining me.